Hello everyone, welcome to Trade Breakdown on EU. I'm going to start off with the weekly time frame first of all to explain to you how I determined my drawn liquidity here and how did I found my directional buys for the day. Right here on the weekly time frame you can see that we're in a bullish institutional order flow, right? Because we are consistently making higher highs and higher lows, and not only that, we are rejecting below lows and breaking above highs consistently, which suggests a bullish order flow. What you can see right here is that the first week of this month we basically formed a ranging candle, and the second candle rejected below that low and rejected below this weekly candle range low, right, to reach the short-term drought in liquidity which I was signaling for the past few weeks. And so once we had that manipulation profile and that manipulation candle to form the low of the month there and to purge below and reject below the low, since after that we started expanding higher towards the long-term drawn liquidity, which is this range high or swing high right here. So what the framework was is that first of all we had to form a retracement profile and reach a short-term drawn liquidity, right? And I've been signaling that for the past few weeks, and I gave you this order block and this low right here, this weekly candle range low, to be your short-term drawn liquidity. And you can see that first of all we retraced lower and formed a retracement profile to purge that low, and after that we formed the low of the month there, and since then we've been expanding higher, right? What you can see is that last week we purged that swing high, right? And now this is the last week of the month. No, actually today is the last day of the month, right? So we've already formed the high of the month here, and I wanted price to reset, right? Reset and close lower to form the higher week of the monthly candle based on the open high low close concept, right? So what you can see right here is that we opened here, we basically formed a ranging candle for the first week. We then went below and formed the low of the monthly candle there. We then expanded high, took out this swing high, and formed the high of the monthly candle. And now we have to retrace lower and close the monthly candle lower to form the higher week of the monthly candle, right? I built this narrative based on the open high low close concept, right? You can see that since this swing high has been taken, our major long-term drawn liquidity is still higher, which is the 3-month CRT high above us. But you know that before we could do that and before we could expand towards that long-term drawn liquidity, first of all we have to form a retracement profile lower, or to at least take out the low of this candle that purged the swing high, right? That is what the least we're going to expect price to do before it starts moving higher. That is what our short-term down liquidity would be, right? Now this short-term down liquidity wouldn't be static and wouldn't be just that low, but we would at least expect price to take out that low, and then we're going to see whether we can retrace even lower, or we are showing confirmation and signs of bullish price action, right? Most important thing is that you're gonna at least expect price to at least take out the candle that purged the high. That is what you're gonna expect for sure. So for Monday today, is this was the last day of the month, I expected price to retrace lower, and I determined my directional bias to be bearish, which being this weekly candle range low right here, right? Now let us go down to the daily time frame to refine this directional bias in this down liquidity even more, and let's see what else we got there. On the daily time frame, again you can see we've got the same framework all over again. We are in a bullish order flow and we're consistently rejecting below lows and breaking above highs, right? And right here you can see that we purged the swing high with this particular candle. So my first and initial target where I want this retracement profile to go to at least is this candles low right here, or this candle range low right here. This is where I'm looking for shorts for today, and that is where I looked for shorts, right? This is how I determined my directional bias for the day. And on the lower time frame, my objective was to look for shorts towards that short-term drawn liquidity towards that candles range low. Now you can see that on the higher time frame, our objective has now been met. We've successfully determined our directional bias and our short-term drawn liquidity. Now let's go down to the 4-hour time frame to see how I built a narrative there and what were my key levels in CRT that I chose. On the 4-hour time frame, you can see that the weekly candle opened right here, and right from here I wanted a candle range or a CRT to be formed there, and from there I wanted to look for shorts I wanted to anticipate shorts. But what happened during London Open is that we went above to take out this daily candle high or this previous day's high, right? And along with that, we tested the mean threshold of this rejection block right here, right? And not only those factors, but along with them, we also had a major SMT divergence with GBP USD, right? What happened is that EU took out this daily candle high, but GU struggled to take out the previous day's high or the daily candles high that it had, which meant that we had an SMT divergence and non-symmetry in price, right? And due to that factor, I expected price to reverse from there immediately. Now, initially, I wanted to look for this 4 hour candle high to be purged as a CRT, but what happened is that price crashed lower and showed bearish confirmation on the lower time frame and formed a model 1 order block entry there. And what happened is that after that, I dumped the initial idea of wanting this 4 hour CRT high to be purged and started to anticipate bearish and lower price action straight away towards the drawn liquidity, right? Which initially would be this 4 hour candle range low. What I also did is that instead of a 4 hour candle range, I took the daily candle that we had purged as my candle range, right? And we had purged that, so I supported the bearish trade idea, the lower time frame, with that daily candle range or that daily CRT. And since we had all of those factors, I had enough conviction in this trade idea that it would play out, and you can see that it did. We tested a rejection block, we had a major SMT divergence with GU, we purged the daily candle range, and it was the last day of the month and price was almost destined to go lower to form the higher week of the monthly candle and to form a retracement profile since we had taken a swing high and our short-term drawn liquidity was the daily candle range low. And based on all of these factors, I decided to take an entry on the lower time frame with an order block entry that we had formed after price purged the daily candle range high. On the 15-minute time frame, you can see that right at the London open kill zone, we came above to purge the daily candle range high and test the rejection block on the 4 hour. And after that, we crashed lower to form this order block entry right here. And after forming this order block entry, I waited for price to retrace above and test the order block with my stop loss above the order block's high. And I targeted the candle's range low with at least 3 risk to reward ratio, right? That was the trade breakdown on EU.